Welcome everyone to the another episode. Today we have Mr. Josh Fuhr all the way from Michigan, US. So Josh is a founder of the Portfolio Consultant, a trading newsletter thus transforming how wealthy investors grow their money, a former corporate consultant, and he turned to trading during COVID. So it's mastering art of the spotting market patterns to achieve exponential portfolio growth. So in early 2025, Josh made a stunning call, exiting all his stocks at SPY 600, predicting a bear market and shorting all market down to exact lows before buying back at the bottom. So now through Portfolio Consultant, he helps investors apply the basic of day trading to boost returns and minimal time, offering precise stock recommendation, buy and sell signals and expert education. So Josh also shares insight on where the market's headed next, drawing from his proven track record. So in this episode, we're going to learn more about Josh's background, how he got into trading, what happened during the COVID, how he made the transition from corporate consulting to day trading, and also now he helping with other individuals, his strategies, his ways of doing investing. So without further ado, let's welcome to Josh to the show. Josh, welcome to the show, and how are you doing today?
Good morning. I'm good. How are you?
Doing great. Excited to have the conversation with you. I have an interesting journey, like last 5 years, into trading world, and obviously the news we're hearing in the trading and stock market and everything in the US is just crazy, isn't it, right now? I'm excited to have the whole conversation with you.
Yeah, I'm excited too. It's been a wild couple of years personally, and it's been a wild month in the market. So I'm excited to share some insights.
Yeah, and that insight is really needed. Like a lot of people are fearful and everything with their funds, for 1K. Some people have the investment on the stocks, and a lot of people lost a lot of amount of money on their portfolio. So before we jump into that, like I guess some advice and the insight on that particular area, let's talk base before you become a trader, before you was a consultant. What you used to be doing, like with your career, was your first career job or like say business? So after you finish your education, what were you doing?
Yeah, so right after I graduated from college, I started a supply chain consulting company. And so we would go into hospitals and help with their inventory management and their finance and um, just worked with some of the biggest health systems in the US. So that was a really fun journey.
Right.
But that kind of came to an end during COVID. We were working, in the supply chain area, and a lot of these hospitals said, "Hey, we've got this pandemic going on. Like we just don't have time to do these special projects on the side." And so things just slowly wound down for us. We were too big, we had too much staff, and it was COVID was the end for us. So we just slowly wound that down over the course of 2020 and decided to look for something new in my journey.
Yeah. And so during the COVID, like a lot of people changed their career path. Like a lot of people had the wake up calls. A lot of people lost their jobs or their businesses, and they have to rethink like what's next for them. Is there like something happened to you during the COVID or the lockdown and everything? You wanted to ask the question like, is moving forward, I'm going to stick to the same career path or made the change, or like did you lose job? Like how was your transition look like? Was it like a planned?
No, it was definitely wasn't planned. I really loved what I was doing. I was making good money. Life was good. Um, but I did take the time to really be intentional about it and decide, okay, what am I going to do next? I did a bunch of research. I was lucky enough to have a nice nest egg to take a little bit of time off and figure things out.
Mm,
Um, Tried a couple different online business models, things like that didn't work out for me. And trading was one of those things, and it just really stuck with me. It was something I was good at. I enjoyed it. I loved the patterns that were involved and the solving puzzles and the reward that comes from doing all this research. So um, it was just something that I kind of started out as like a hobby. Maybe it was
right.
going to be a job, but probably not. And then it just kind of took off from there.
Interesting. So Did you had any kind of background in a stock before like a COVID, or like did you invested here and there or like traded?
Yeah, I did a little bit of investing. Obviously, I had a 401k account and I would try and manage that the best I could. I had an investment advisor like everybody else. And
Mm,
so that kind of experience of going from like a retail investor to somebody who does this full time was really eye-opening, kind of seeing both sides and having made some of those same mistakes that people continue to make today. So not a ton of experience before I jumped into it, but
right.
just enough.
Okay. So then obviously you didn't had like tons of experience like how other fund manager or investor banker like they have been doing. So did you had to learn the whole thing, or like how's your start begin? Like how much money you invested in, how much you learning? Did you had a mentor? Like trying to get some picture of that.
Yeah, I think I started out just kind of learning online through YouTube, through Twitter threads, things like that, learning the basics. There's so
Mhm.
much out there for free just to get started and things. And then as it got more serious, as more money got involved, I got a mentor, signed up for a more formal course through that mentor, and learned some of the basics and intermediate techniques of day trading. So that's really important, to do that because that helps shorten the learning curve.
Yeah,
The trading journey is so difficult, it's so rocky. It starts out good, you win, you think you've got it all figured out, and then all of a sudden you start losing and you don't know why. And so having that mentor really cuts through that journey of ups and downs, when you first start trading.
yeah. And we hear all the time, like when people say we are doing a day trading, a lot of people have the misconception. I think like they're saying like it's kind of gambling, like you cannot predict the market, and that there is no way. Like even though Warren Buffett like putting in an investment for a long time, like they don't do any kind of day tradings. Is that kind of true? Like you are like kind of betting or like hoping, or do you think like it's a systematic way like you can make consistent profit?
Yeah, it's a little bit of both, and that depends on how you approach it.
Mm,
There's the wrong way to do it is
right,
betting. Especially people that like to gamble on a company's earnings. Tesla's earnings are coming out tonight, so people are placing these $1 million bets on whether it's going to be good, whether it's going to be bad.
right.
That to me is gambling. But the system that I've developed and that many other people have, people that are sustainable in day trading,
Mm,
it becomes more systematic. And the metaphor that I like to use to describe it is, when you're gambling on earnings, it's a coin flip. It's 50-50, yes or no, up or down. But when you have a system, when you avoid those gambling behaviors, you're still flipping a coin, but it's got an 80% win rate. And when you do proper risk management, your wins return 80% returns versus a 20% loss. So there's that risk to reward ratio. So if you're flipping a coin and it comes up heads every time, then that's a good deal for you. And
right.
then even better, if heads pays you $8 and tails only loses you $2, you're going to continue to flip that coin.
Yeah.
So once you develop a system, then it moves away from that gambling mentality.
And when you started, like how much did you start off after the COVID? Like when you decided to you going into this, and did you make the full-time transition immediately on that trading?
Yeah, I don't think it was full time right away, but it was kind of a part of a basket of
Mm,
things that I was doing for income. So I probably started with $50,000 in my account to start.
right.
I probably wouldn't recommend that to a beginner, even if you have the money. Start out
Yeah.
slow, and start building that system first. Um, and then I've just slowly from there grown that account.
Right. So if someone is a beginner, like a never traded and doesn't have the background, how much your recommendation to have the funds?
Uh, yeah, so I think, you know, within day trading, you can multiply your funds pretty quickly with leverage products. There's options and different ways that you can use leverage to grow an account. I would stay away from that
Mm,
because there's so much risk. It's really, really tempting to do so. So I always recommend to people start out with what you can afford to lose. It's not super likely that you're going to lose 100% of what you put in, but think about maybe losing 25%, 50%. What kind of impact would that have on your life?
yeah.
So put enough in there that you can feel the pain. If you just put $20 in, then it becomes gambling because I don't care if I lose $20, but you want to feel some kind of pain if there's losses, but you don't want it to be too much that it's going to ruin your life. So I always
Hmm.
recommend that because paper trading, trading with fake money does not simulate those emotions, and those emotions are really key.
Right. And let's say someone started with $1,000 for an example, how much return they can expect, like, or like hope for, like a monthly averages, or like is a yearly, like how should like have a mindset of that? Because if they're thinking about 5x or 10x within a month, then it's kind of gambling. Like obviously there is a rules to it. So how much is the rules like you follow?
Yeah, so it's definitely possible to do 5 or 10x a month, but that's gambling.
Yeah.
Don't be seduced by the people online that are doing that because they're gambling. They might not be showing you their win or their losses. For me, a consistent month is between 10 and 20%. So if you're looking at a big portfolio, a retirement portfolio,
Mm,
um, that's at least doubling your portfolio every year. So with the system that we've developed, I would say somewhere between 10 and 20% per month is pretty reasonable and really not that high risk of a venture for you.
right. 10 to 20% per month, so it's like a doubling your money every year, right?
Yeah, and with the compounding effect, that starts to compound like crazy once you get going.
Yeah. And so, and how much time like do you think like someone need to invest in there like every single day? Because obviously you have to learn a lot of basics to it, like how to trade, how to control your emotions, and strategies and things like that. How long did it actually take you for like learning all these things? Like, do you think it's ongoing process, or if someone can take a course or learn it from YouTube within a month or two?
Yeah, I think it subscribes pretty well to the 10,000 hour rule where
Mm,
it really took me 4 to 5 years to really master this. And that's,
right.
I'm on kind of year 5 of my journey. So obviously I had great success up to here, but learning something new every day. So you can go out, you can have success, you can get some good returns without those 10,000 hours. Um, but the screen time is the most important. For people that are really serious about getting into day trading as like a career,
Right.
um, just sit in front of the screen, watch it, watch how the market moves, watch it at different times of the day, watch different instruments, just see how it moves. And that's what I do every day. I'm in front of the screen 8 to 10 hours a day before the market opens, after, on the weekends, just like watching these patterns. And that's so important for for people that want to be really serious about day trading.
Right.
Now, if you want to be more of an investor, there's an approach to this where you don't need the screen time, where
Mm,
you can learn, you can get the basics, but you're looking at longer term charts, longer term patterns. So you don't need to sit there 8 hours a day and watch how it's moving.
yeah. So it's like basically spending 8 to 10 hours per day watching the market, understanding everything, making a notes, and then you make your move when the market opens, right?
Yeah, um, you can do it when it opens in the afternoon. What I like to focus on, I'm more, I guess, of a swing trader than a day trader. So I have predetermined areas on my chart where I'm willing to buy a stock.
Mm,
So I like to set up an alert that says, okay, if Tesla gets down to $200, I'm going to buy it.
right.
Um, and it doesn't really make sense for me to stare at that all day until it gets to $200. Um, and so that's the approach that I take. And then I'm consistently scanning for new opportunities all day and kind of setting those alerts that I can act on later. So that might be first thing in the morning, it gets to 200, or it might be in the afternoon, it might be after hours.
Mhm. Yeah. So is it ideal for someone who's listening to this podcast? They probably have a day job, like getting into day trading, because it requires like a lot of time. Can people do less hours on a screen time at the beginning, and then when they get into full time, like yourself, then they put more hours in?
Yeah, I think that's one of the reasons that we created our newsletter is to kind of outsource that screen time. So
Right.
I'm on the screen 8 to 10, 12 hours a day doing this research. And part of the reason that I started the newsletter was I'm doing all this research, but not able to invest in every single stock that I like because my portfolio is already fully invested in something else.
Mhm.
So my newsletter is really that outsourced research where we say, hey, we've been watching this stock for a while. Um, we recommend that if you can get it at this price, then go ahead and take a stab at it. And we think that it's going to reach these certain targets. So when it gets to that target, there's a really good chance statistically that it's going to reach that target and maybe it stops there. So that might be a good chance for you to take your profits and look for something else.
Mhm. Yeah, that like what would be my another next question is like, since you are making money, like why you want to more people to learn this, and why is the newsletter you created? What's the main reason for it? Like, do you charge for the newsletter, people to subscribe to it?
Yeah, there is a charge for it. So, for me, it was honestly a lot of traders are afraid to say this, but it was a new revenue stream for me.
Mm,
I'm doing all this research, I'm providing value to people. So it was a new revenue stream for me to monetize those 6 to 8 hours a day that I'm researching and not actually acting on my trading.
right.
There's only 2 hours a day, maybe, that I'm acting on trading. So it was a way for me to monetize that. But, part of the reason too is I have friends, I have family that have retirement accounts. My mom is retiring in August of this year. Um, and I wanted to be able to provide the people around me with a way to grow their money quicker than the market so that
Mm,
they can retire early, retire with more money, buy that house, buy that car, take that vacation, whatever they want, whatever their goals are. I was driven by kind of my inner circle first, helping them pursue these opportunities. And then I really enjoyed it. I enjoyed sharing this knowledge. And people around me were so hungry for it, like to learn how do you do this? Well, how do you, I'm getting 7% a year at my broker, and he's telling me that's good. How are you doubling, tripling, quadrupling your money every year? That's crazy. Um, and so that was really where it all came together for me that I started helping these people, and I needed kind of a formal way to share those ideas with people and built out this newsletter.
right. Yeah, makes sense. So obviously, with the newsletter, you've been helping as much as possible people possible. Do they have to have like a retirement fund, like to work with, or like those who have a 401k in US, probably pension fund we call it in UK. So is that money like a people going to be managing on their own, or like are they going to be managing under you, or like they have like a fund manager? So how does it work for those who is actually right now have money on their 401k and they don't manage it actively? Do they have to transfer over, like if they want to follow your newsletter? How's your process looks like for anyone interested on your newsletter service?
Yeah, so this is what we provide now is the stock tips. So this is for people that are actively managing their own portfolio,
Mhm.
whether that's a brokerage account that's not in your retirement, maybe like a Robinhood account,
Yeah.
or it could be your retirement account with one of the big brokers. But you do have to have control over your money and have to be able to make those picks yourself. So for people that are, let's say they're approaching retirement, or maybe they're my age, they have a broker, we encourage them to sign up. We have a free version of our newsletter where they can have access to our educational system and kind of learn, like, what's this about? Is this real? Is this snake? Is he selling snake oil to me?
Mm.
So we encourage people to go in and try out the free version and just learn the concepts and maybe set some money aside in a smaller account and just try it out. I have a few friends and family that followed me for a while and they were like, I know he's doing well, but I'm not super confident that I will do well. So I just
Right.
said, hey, put a couple $100 in an account, buy a couple of these stocks and watch it over 6 months and see what happens. So that way you can build that confidence. Maybe you do want to start actively managing your own investments. So in the future, I'd love to. This is kind of a stepping stone to
Yeah.
having my own fund. But for now, we don't have that option.
All right. Yeah. So now you're seeing like a lot of things is changing, a lot of things is happening in the US, lots of tariff, and people are getting scared, and the retirement fund is lost 10-20%, some of them, and people are fearful to invest, or like they are fearful of their pension fund, their 401k, and all of them assets. So how are you seeing about the market, how it's going to do in a few months or years, and like what is the best option for like people to do, like they go and use your service, or like they start doing managing their own, like for next future event, something like that, could be another COVID, could be a recession comes in. So what is the best advice you can give them?
Yeah, I think the reason I started, actually the day I started the newsletter, was when I sold all the holdings that were in my retirement account in January. And the what happened in the market in the last few months was something that we predicted, that we could see this was happening. The pattern was there.
Mm.
So that's why I exited, and a couple weeks ago bought back a lot of the same stocks at a cheaper price. So for the people that are watching this, that, the market's down 15, 20% since January, they're freaking out. They don't know what to do. My best advice is never sell at the lows. When you're incredibly fearful, that's kind of the trick that the market plays on people, is get you to sell when you're scared. And selling right now is not the best idea because you're going to take a loss. So the
Yeah.
options would be to ride this out. If you're a long-term investor, if you're in your 30s, 40s, just hang tight. This is going to recover. It's the market's going to be way up by the time you retire. So don't stress yourself out about this. My mom, like I said, is retiring in August.
Mm.
So the people like that are, you know, my portfolio is down 20%. What do I do? I need this money soon. Um, Same thing, hang tight. I think for the next year or so, the market's going to be what we call range bound. And
Yeah.
that means it's not going to go down a lot. It's not going to go up a lot. It's just going to kind of bounce around here in the middle as it tries to figure things out. Um, so yeah, I think the big lesson that we learned here is in this in this last couple of months is don't sell the fear. You have to actually buy the fear. If you feel uncomfortable buying something, it might be a good idea. If you're thinking like, hey, the messaging's so bad, the world's ending, that's when you want to buy. When you look back at COVID, the people that bought stocks at the COVID lows are doing incredibly well. They
Yeah.
had that risk tolerance to buy when other people were selling, and now that's their stocks are way up.
Yeah. That's great. Thank you for sharing that. So, Josh, we are nearly coming to end of this podcast. So, before we wrap up here, if anyone wants to learn more about yourself, your business, or they wanna join your newsletter, where's the best place to find you all?
Yeah, so our newsletter is portfolioconsultant.substack.com. And if you go to the link portfolioconsultant.substack.com/podcast 30, we're offering a 30% off your first year with the newsletter. So that's, you can either do a monthly plan or a yearly plan that way. But all those payments for the first year are 30% off.
All right, that's great. Thank you so much for your time. I wish you very best of luck with everything you do, and thank you so much for your time today.
Thank you.
You're welcome. So that's a wrap, guys. Thank you so much for listening to this podcast episode with Josh. I hope you enjoyed our conversation. So if anyone wants to learn more about him, you can visit his website. He just mentioned, and I'm going to put the link in the description for you to find him easily so you can join his newsletter. So until then, I'll talk to you in the next episode. So take care, everyone.